Over the past few decades, economic and geopolitical tensions between China and the United States have escalated, resulting in various forms of retaliation by China in response to U.S. policies. One of the most notable actions occurred during the U.S.-China trade war, which began in 2018 under the Trump administration. In retaliation to U.S. tariffs targeting Chinese goods worth hundreds of billions of dollars, China imposed its own tariffs on American products, including agricultural goods such as soybeans, automobiles, and seafood. These measures aim to pressure the U.S. to reduce its trade deficit and reconsider its trade policies. In addition to trade tensions, China also retaliated against U.S. restrictions on its technology firms. After the U.S. banned Huawei and imposed restrictions on its access to semiconductor technology, China accelerated efforts to develop its own indigenous technologies. Moreover, China imposed sanctions on American companies and executives accused of undermining its national security. Further escalating tensions, China responded to U.S. sanctions on Chinese officials over human rights concerns in Xinjiang and actions in Hong Kong by sanctioning U.S. lawmakers, businesses, and organizations. These reciprocal sanctions were meant as a warning against interference in China's internal affairs and aimed to deter future U.S. actions perceived as hostile. China has also used its critical role in global supply chains as leverage. By adjusting port controls on key materials like rare earth elements, which are essential for high-tech industries, China exerts economic pressure on the U.S. and other countries that rely on these materials, demonstrating its strategic importance in global manufacturing. To reduce the impact of U.S. retaliation, China has pursued economic diversification and strengthened alliances through initiatives like the Belt and Road Initiative, BRI, and participation in multilateral organizations such as BRICS. These strategies aim to lessen China's dependence on the U.S. economy and create alternative trade and investment pathways. However, China's response has now entered a new phase, a direct challenge to the U.S. dollar. Reports indicate that Chinese banks have made significant bets against the U.S. dollar, anticipating its depreciation. It's estimated that these banks have invested over $100 billion in short positions on the dollar, expecting to profit from its decline. The strategy involves Chinese banks engaging in foreign exchange swaps with U.S. dollars, which allows them to profit from the dollar's fluctuations. By swapping the yuan for U.S. dollars, these banks lock in an exchange rate, and if the dollar weakens, they benefit as the U.S. counterpart must pay more yuan. This tactic has led to a surge in foreign exchange market activity, with estimates suggesting that Chinese state-run banks have amassed over $100 billion in short positions on the dollar. This trend intensified in 2023 and 2024 as banks executed these swaps to stabilize the yuan without depleting China's foreign reserves. These actions are part of a broader initiative to strengthen the yuan, which has been under pressure due to factors such as the Federal Reserve's policies and a slowing Chinese economy. Despite these efforts, the yuan faced its worst annual performance against the dollar in decades. The main driver behind these high-stakes financial maneuvers is China's central bank, which is focused on stabilizing the yuan amid capital outflows and a weak Chinese economy. These efforts aim to increase the scarcity of the yuan in the market, potentially raising its value as Chinese banks exchange yuan for dollars. However, these measures come with risks. If the U.S. dollar continues to strengthen, Chinese banks could face significant losses. Reports suggest that some institutions have already lost between $5 billion and $16 billion. Nonetheless, Beijing is not backing down. The Chinese government is intensifying its financial ambitions, including a planned merger of two state-backed brokerages, creating a $230 billion financial powerhouse. This consolidation underscores China's broader effort to overhaul its financial sector and compete with Wall Street. President Xi Jinping is personally guiding this restructuring, aiming to build top-tier investment banks that can rival their U.S. counterparts. This move is part of China's strategy to reshape the global financial order and reduce its reliance on American markets. As the U.S. implements trade barriers and encourages companies to reduce their dependence on Chinese manufacturing, and Xi launches his own campaign to challenge the Western-dominated financial system, the divide between the two nations is likely to grow wider. What was once a closely intertwined economic relationship, characterized by U.S. investments in Chinese companies and Chinese firms listing on American exchanges, is now evolving into a high-stakes geopolitical confrontation that could reshape global financial markets. Understanding this shift requires a closer look at China's long-term efforts to challenge the dollar and alter the global financial landscape. In recent years, China's dollarization initiative has emerged as a powerful force shaping global financial landscapes. This shift represents a strategic move by China to reduce its reliance on the U.S. dollar in global trade and finance. Driven by a combination of geopolitical tensions, the desire for economic diversification, and a push for greater financial sovereignty, China's efforts to de-dollarize have been gaining significant momentum, with major implications for the global economy. One of the most notable milestones in China's dollarization drive occurred in March 2024. For the first time, more than 52.9% of China's cross-border payments were settled in its domestic currency, the renminbi, RMB. This surpassed the US dollar, which accounted for 42.8% of these transactions. This marks a dramatic shift from 2010, when the RMB accounted for less than 1% of China's international settlements. In addition to China, other countries like Brazil and Argentina have also begun settling trade transactions in RMB, signaling a broader trend toward the use of alternative currencies in global trade. China's efforts to de-dollarize have been supported by a deliberate reduction in its holdings of U.S. Treasury bonds. In the first quarter of 2024 alone, China sold $53.3 billion worth of U.S. bonds. This move is part of a broader strategy that has seen China sell an estimated $300 billion in U.S. bonds between 2021 and mid-2023. One of the driving forces behind this shift is the need to support the Chinese yuan, which has been weakening against the U.S. dollar. By reducing its exposure to U.S. debt, China aims to stabilize its economy while also strengthening its position in global finance. Alongside this move, China has also significantly increased its gold reserves. By mid-2023, China's gold holdings had grown to 4.9% of its total reserves, the highest level since 2015. This strategic pivot toward gold reflects China's broader desire to diversify its reserves and reduce dependence on the US dollar. As China looks to build greater financial independence, it is investing in assets that provide stability and protection against dollar fluctuations. China's push for dollarization is closely linked to its active participation in BRICS, an economic bloc comprising Brazil, Russia, India, China, and South Africa. BRICS represents a significant portion of the world's GDP, surpassing the combined economies of the G7 nations. Over the past few years, the BRICS group has been exploring ways to promote non-dollar trade settlements and reduce dependence on the US dollar in global trade. This initiative gained significant momentum after the sanctions imposed on Russia in 2022, which restricted Russian access to the US dollar and other financial systems. In response, BRICS nations, led by China and Russia, have been working to explore alternatives to the dollar, including the use of local currencies, precious metals, and commodity-backed currencies. These efforts are aimed at creating a more resilient and independent financial system that can withstand external pressure, particularly from the US. In 2023, during the 15th BRICS summit held in Johannesburg, the group emphasized the need for a move away from the US dollar in international trade. China and Russia, in particular, have been at the forefront of this campaign. Notably, India recently settled an oil trade with the UAE in Indian rupees, demonstrating the feasibility of using non-dollar currencies for international transactions. Over 40 nations, including key oil producers like Saudi Arabia and the UAE, have expressed interest in joining BRICS, a move that could further accelerate the de-dollarization of global trade. The potential shift away from the dollar in global oil markets is a particularly crucial development. The petrodollar system, which has long supported the US dollar's dominance by pricing oil in USD, is now under strain as some of the world's largest oil producers consider alternative currencies for their transactions. If BRICS succeeds in facilitating oil transactions using local currencies or commodities, it could drastically alter the dynamics of global oil markets. While the US dollar remains the dominant global reserve currency, the increasing use of the RMB, combined with China's diversification into gold, and the BRICS bloc's collective push for non-dollar trade settlements, poses a growing challenge to the dollar's supremacy in certain sectors. Despite the continued strength of the dollar, several challenges stand in the way of its unchallenged dominance. Currency volatility and the limited liquidity of non-dollar currencies are significant obstacles that could slow the pace of de-dollarization. Additionally, while the use of the RMB in global trade is growing, it still faces significant barriers to becoming a fully global reserve currency. Non-dollar currencies must be widely accepted and easily convertible, and they need to have liquidity in international markets. These conditions are not yet fully met by the RMB, which still lags behind the US dollar in terms of its global role. Moreover, the emergence of BRICS as a united economic bloc has the potential to reshape the global financial landscape. The combined GDP of BRICS countries now exceeds that of the G7, giving the bloc significant economic leverage. The inclusion of new countries, particularly in the global south, could further amplify BRICS's ability to challenge the dollar's dominance in global trade and finance. BRICS countries are actively working on new financial infrastructure, including a blockchain-based payment system that could facilitate cross-border transactions using local currencies or digital currencies, bypassing the US dollar entirely. The increasing demand for alternatives to the US dollar is particularly evident in developing countries, as the economies of the global south continue to grow at a much faster pace than developed economies, with developing nations projected to grow at 4% in 2024, compared to just 1.4% for industrialized nations. The influence of the BRICS bloc is set to increase. This economic dynamism positions BRICS and other emerging economies as key drivers of the de-dollarization trend. For instance, trade between Brazil and BRICS nations has grown exponentially, from $48 billion in 2009 to $178 billion in 2022. This shift in trade patterns underscores the growing importance of BRICS as an economic bloc and the broader trend away from dollar-based transactions. As more countries look for ways to bypass the US dollar, they are turning to alternative currencies, such as the RMB, to settle trade deals. Additionally, the imposition of US sanctions on countries like Russia and Iran has accelerated the move toward dollarization. These countries, along with others, are increasingly turning to alternative currencies for trade, in an effort to avoid the financial restrictions imposed by the US. This trend is being driven by the need for economic independence and financial resilience. In response to the growing push for de-dollarization, the US government, particularly under the leadership of President-elect Donald Trump, has issued strong warnings to BRICS nations. Trump has explicitly stated that the US will take action against countries that continue to pursue alternatives to the US dollar, including imposing new tariffs. This hardline stance highlights the perceived threat that BRICS's dollarization efforts pose to the US dollar's long-standing dominance in global markets. By acknowledging the risks to the dollar's supremacy, Trump is signaling that China and its BRICS partners have made significant progress in reducing reliance on the US dollar. This response also marks a pivotal shift in the global financial landscape, as the dollar's position as the primary global reserve currency faces increasing challenges. China's dollarization initiative, in collaboration with its BRICS partners, is reshaping the global financial system. While the US dollar remains dominant, the increasing use of the RMB and the push for alternative trade settlements by BRICS nations are challenging the dollar's supremacy. As the global south continues to rise economically, the potential for a new financial order, one less reliant on the US dollar, becomes increasingly tangible. These developments mark a critical juncture in global finance, one that could redefine the balance of power in the global economy. The efforts of China and BRICS nations to establish alternatives to the US dollar are bearing fruit, and this shift could have far-reaching implications for the future of global trade, investment, and economic governance. Thank you for watching this video. We appreciate your time and support. If you found this content insightful or thought-provoking, please consider liking and subscribing to stay updated with our latest videos. Your engagement helps us expand our reach and continue producing content that matters. Don't forget to check out more of our videos on the screen now.